Welcome to ForexTV.com. It's Tuesday, February 19th. I'm Remy Hokie for your New York Forex Market Buzz. In afternoon trade as of 1:15 p.m. Eastern Time, Euro dollar is at 1.4733. Sterling dollar is trading at 1.95, while dollar yen is at 107.67. In today's session, U.S. equities have advanced after the three-day holiday weekend. Overseas in the UK, there was a recovery in the financial sector. Barclays earnings helped lift shares, while there was more troubling news from Credit Suisse. Switzerland's second largest financial institution announced $2.85 billion in write-downs. Meanwhile, inflation has been a key topic in today's session, with China posting the biggest rise in inflation in over a decade. Meanwhile, Canada reported a slowdown in consumer prices, hitting a low not seen since July of 2005. Joining me this afternoon is Meg Browne, Senior Currency Strategist at Browne Brothers Harriman here in New York. Good afternoon, Meg.
Good afternoon.
Thanks for joining us today. Well, we're starting out the holiday-shortened week with the U.S. dollar mixed against the majors, but let's start out by looking at the pairs which have been seeing the most price action, starting with the dollar block currencies of the Aussie dollar and the CAD. So, Meg, fundamentally, what are the driving forces of these two currencies, and what is your weekly outlook?
Right. Well, the Aussie dollar has been boosted by a number of factors. Obviously, the first one being that the Reserve Bank of Australia's statement was more hawkish than the market thought, and than we thought. We had been expecting the RBA, which had already hinted that it would hike. We had expected another hike. This statement has implied to the market that possibly two more hikes fairly soon. So overall, very hawkish. There was also M&A news, which helped support the Aussie dollar. On the Canadian side, it's sort of the opposite. The market's been looking for a rate cut in March for a while. Today's data, the CPI was within expectations, but certainly on the soft side, which means that the Bank of Canada really can focus on growth. And we had a number wholesale sales, which was soft, and it comes on the back of other data that have been weak, the trade numbers, for example. So it just reinforces that view that the Bank of Canada will be cutting rates in March, most likely, with further easing down the road. So interest rate policy is moving in the opposite direction for those two currencies, and that's part of the driver.
And moving on to the U.S. dollar against both the euro and sterling. The British currency is down against the euro and dollar, while the euro has gained against both cable and the U.S. currency. So if you could tell us what's contributing to euro strength that hasn't been priced in already, and what levels you're watching for the major currencies.
Okay, well, with the euro, you can look at a couple of things. Last week, taking a step back, the euro has been trading in a wide range for the last 4 months of 143 to 149. Over last week, or for part of last week, it was in the lower end of the range, and it's now moved above 146, and it's bid. Now, what's the cause? Is it a shift in the views on interest rates? Well, to some extent, but not. The main driver seems to be positioning, with speculators in the IMM extending their positions last week as the euro came off, and cutting them back this week, probably. Certainly, in terms of interest rates, the market's looking for further Fed cuts, and the ECB's hawkish stance last week probably provided an incentive to take the euro a little higher. But in the scheme of things, in the big picture, the euro hasn't broken out of its wide range, and we think what it's doing is carving out a top in preparation for the start of a downtrend later on in this year.
Well, Meg, speaking of ranges, if we could shift our focus over to dollar yen as well as the yen crosses, what is your near-term outlook for the Japanese currency? And tell us about the external factors that you see weighing on the yen crosses.
Well, the yen itself, what over the longer term drives the yen is really flows. Japanese investors overseas are bringing their money home, speculative flows. It's more of an external function than an internal function. Yes, it's true the Japanese interest rates are quite low, that's relevant. But the flows are really what are driving this currency. At the moment, the speculative market has been long yen. if you look at IMF data and also some of the Japanese retail data, the speculators have been long yen and increasing their positions. Japanese retail have been short dollars. So one of the factors is shorter-term positioning, and what's driving that is sort of a momentum play that you expect that the yen will strengthen as negative news comes out, for example. So you think you can benefit, even though you're losing the interest rates, you could benefit from momentum, and that seems to be what we have. The net result is the yen is basically traded in a range as has the euro. Yet last week it broke through above the 108 level. It's come back down through it, but the range is really 106, 108, and it frayed the ranges over the last few days, but has come back down into its range.
Okay, and last but not least, Meg, if you could give us your assessment of this week's key data both in the U.S. and overseas. Here in the U.S. we have CPI and housing starts in the upcoming U.S. session, but what should investors be paying close attention to in the coming week?
Right. Well, obviously CPI is one focus. It's expected to come out same pace of growth. The minutes of the FOMC minutes of the last FOMC somewhat important, but we're likely to get more of the same kind of conversation there. Overall, I think what the market's doing is looking out beyond, starting to look out beyond this quarter data at what happens down the road. The market's priced in quite a bit of easing with Fed funds. The market's looking for 2% Fed funds by year end. It's pricing in the possibility of an intervening cut in March. The data are still relatively soft. The Philly Fed index is expected to improve, but it's still negative. So overall, we're likely to continue to have somewhat soft data, but it's unlikely that that's going to, for example, take the euro out of its range. So what we have to look for is any signs of shift in sentiment about the Fed, about financial markets. In a way, the market's priced it for the worst. So what would shift the view would be something that improves that outlook.
Okay, Meg, as always, thank you very much for insight and analysis into the Forex marketplace.
Thank you.
This has been your Forex Market Buzz with Meg Browne, Senior Currency Strategist at Browne Brothers Harriman. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.